Hello everyone, I am Joey Wade. I'll just take a short time to talk about the Bernie Madoff investment scandal in 2008. A little background about Bernie Madoff. He was born in New York City in 1938. He then became one of Wall Street's elites very quickly, as he was the founder and chairman of his own investment firm, Bernie Madoff Investment Securities (LLC), and the former head of Nasdaq in the early 1990s. But on December 8, 2008, Bernie Madoff was arrested. He was very well respected around Wall Street, but little did everyone know he was playing them all while having a $65 billion Ponzi scheme and hurt many of his victims financially, and even some of his own family members as well. A Ponzi, so to say what a Ponzi scheme is, basically taking money from new investors, paying your existing investors. In this case, investors weren't putting their money into the stock market rather than a JP Morgan bank account, which Mount would then use to pay off um, existing investors that he needed to pay. According to Scott Cohen of CNBC, he, Manoff convinced his investors to use a split strike uh, conversion, but Manoff had other plans with this money. He obviously deposited this money uh, to pay off his other clients. Then when in 2008 when the market crashed, his fraud eventually had to catch up to him as he wasn't able to keep up with the financial crisis of 2008 and the economy falling. He just couldn't keep up and eventually got arrested in 2008. But on December 7th, he told his two sons about what he has done, and the next day he was arrested when his two sons turned him in to authorities. To get into more of the Ponzi scheme itself, there's conflicting reports, but most uh, say it started in the early 1990s, as early as 1992, but had his like one of his financial people early on say it started as early as 1975. So it had been going on for at least 17 years at the time of his arrest. At least 17 years, probably 18 years around there. Madoff made roughly about $435 million profit after tax with this scheme. He basically told investors they would get high returns, and they never thought anything of it, of course. So why would they? They're getting high returns on their investment. And he basically told investors his returns would be high, and it was a good image already has with prior, like getting investors, get new investors, good and get more new investors to help pay off his older investors more often. And he said that he had a low risk investment strategy. What was odd though, as the Ponzi scheme could have been spotted way earlier, wasn't it? Was for the SEC being ignorant here, because we had a whistleblower come forward in 1999, but the SEC blew it off and didn't think of anything of it. But then in 2005, they kind of were like, okay, let's check up on this firm. Mash had to show his trading account information to the SEC, and then and then and then later, 3 years later, in 2005, he might have pleaded guilty and was eventually sentenced to 150 years in prison and pay $170, 170 billion dollars, and a forfeit of $170 billion. And the U.S. Marshals also seized and auctioned off three of his houses and four boats. And then in 2001, Madoff would pass away in 2021 due to kidney disease. Thank you.